I placed top 50 out of 1,000 competitors in a trading competition. And I'm going to show you how I did that, how I used my currency strength meter in line with my currency strength heat map, in line with analysis to then create a result which placed me in the top 50. Now, top 50 out of 1,000 doesn't sound too impressive. The rules surrounding the competition were the fact that you had to start with a $25,000 demo account. You had to at least get over 2% in order to reach a potential goal of becoming in the top 50. And you also had to trade with a leverage of 1 to 3. So all in all, to start the competition, 1 to 3 leverage is low. It's lower than what you'd probably usually see with most retail brokers. Now, one of the ways that I like to trade, as you probably already know, I use a very, very systematic approach. I try and identify the strength and weakness using the currency strength meter, which you've probably seen loads of times in my videos. And I use that currency strength meter to identify markets that might be trending, which then gives me a better opportunity to maximize profits. So the first actual trade I made on the trading competition was an Aussie Swiss long, and I bought Aussie Swiss because the currency strength meter at the time told me that I wanted to be long Aussie Swiss. The Swiss franc was weakening at the time. The Australian dollar was finding some support. So on the day of the 15th of February, I went long on Aussie Swiss. I went long at 57.40 or 0 spot 57.40. My target was 57.80. And the reason why I was targeting that area was because it was a level of resistance. So one thing I like to break down, once I've identified the market that I want to trade, I like to then use a sort of multiple time frame analysis approach to help me identify the sort of, is the conditions correct, essentially. So first things first, currency strength, tick. Next thing, market conditions. Now, the market conditions I can see here on the chart, price was rallying to the upside. We'd recently broken out of some key highs to the left. The area of resistance that I was really looking for was for price to come up towards the 0 spot 57.75 handle, which were highs that formed back on the 2nd of January of this year. So I was looking to see, can price kind of reach those again? And then maybe it will find a bit of resistance. If it breaks through, I can maybe look for more longs. But that was the goal at the time. Now, the day prior, the 14th of February, we actually had a strong bullish close, which sets up my day going into the next day, because I want to see that the daily closes are bullish. I want to see that they're making higher highs, higher lows, because then the likelihood is that that could potentially continue going into the next trading day. My next sort of setup is I'll go to an hourly time frame, and I just move back here, and we go back to that day. I need the conditions, like I said, to be met. Now, one of my conditions is price needs to be in an upward trend. You can see that here. I have a 50 moving average and a 200 moving average on the screen. The market is making higher highs, higher lows, and price is above those averages. One of the opportunities then I look for is for price to come back to those averages, and then for price to close back above the 50. This is what I use for trending conditions. When price is above that 50 average, you can often see an expansion in price. That's what I'm looking for. So you can see that clearly here. As price holds above the 50 MA, it's continuing to move higher. On this particular day, on the 15th of February, I was looking for price to at least come back below 50% of the previous day. Now, that's not necessarily detrimental to my trading strategy. It's just something that I like to see. I like to see price being below a 50% level. The reason being is risk-reward ratio will increase significantly if price is below that 50% of the previous day. Okay, in my experience, that's what I found anyway. So I ended up taking a long position pretty much around about that 50% retracement area. As price closed above the 50 MA, I entered long, price rallied, and that was pretty much my 2% targets done within one trade. So just to put it into context, this trading competition lasted 2 weeks. It was only a 2 weeks one. You had to make at least over 2% to place in the top 50. And I'd done that within my first trade. Okay, so for you to these trading competitions, it can be often the case where you put a lot of pressure on yourself to perform immediately and to perform to a point where you're trading every day. You're trying to knock off trades, you're trying to trade very actively. That can have the opposite effect in trading competitions. You want to be able to trade calmly and in line with the system to give yourself the best chance of coming out of it in a good position. Also as well, the lower leverage really played to hand here. I wasn't necessarily able to put more risk on the table, so I had to really kind of think about what market was trending and how I could maximize that position. So that was the first trade. Now the second trade, I actually took three other trades, and I actually used a little bit of risk management on these ones and came out of them a little bit early, but there was some high impact data news that I was really fighting with at the time. So the second trade was Euro US dollar. I was looking for a long opportunity on Euro, and basically similar things happened again. So this was the trade down through here. I entered a position around about 1.0798. Again, following a very, very similar system. You can see here, price recently made new highs. It was bullish the previous day. If I just pop a fib on there, I don't know whether this one was the 50%. I think it might have just come under the 50%. Again, just slightly under it. But I had that rejection of the 50 MA. We had the 50 above the 200, price above the 50. I entered a long position. Then we had FOMC meeting minutes on this day. So what I did was, thinking about the trading competition and the rules that had been set, I was above the 2% target at this point. So you've got to think in terms of risk reward. Do I kind of go for it here and risk losing? Okay, so risk losing, or do I try and be a hero? And for me, I'm a bit more of a conservative trader anyway. So I ended up just closing that position out for a small win. It wasn't anything great. I think it was about 0.5 R in the end. But I ended up closing that position about 0.5 R. Now, it did run up to my whole target, so I can probably learn a lesson out of that in terms of maybe I could have just brought stops to break even. I think I would have been stopped if they were at break even anyway. But there is opportunities to do that as well. But my ultimate target was 1.0875. But I followed the same rules. My currency strength for me, it was actually pointing out an opportunity for the dollar to weaken slightly. It was in a reversal zone. Euro was getting a little bit stronger, so I thought there was a potential for euro dollar to move higher. Going into the daily chart, on that particular moment in time, we had a strong bullish close. So I'm just going to zoom in on the chart here. We had a strong bullish close the day before, closing above significant level of resistance, looking left. Thought that we could expand up to the next level, which were the highs that formed back on the 2nd of February. And it did obviously extend into that level. Obviously, I didn't take the full amount in that trade, but that was exactly what I was looking for there. The second trade, or the third trade, sorry, was US dollar yen. I ended up going long on dollar yen. I again ended up coming out of this after the FOMC meeting minutes. This was a bit more of a moment that I thought the yen would continue to weaken. And to be honest, closed that out just slightly in profit, pretty much break even. It did end up going up to my targets, which were around about 150.80, and I did try and capitalize it on the next day here. You can see I put a marker down there. But essentially the same thing happened again. The 50 moving average is not on here. Let me just pop that back on and go back, which is just in here. Again, look at that, close above the 50. You can see I'm being very consistent with how I enter the market. Because of the FOMC meeting minutes, I actually closed those positions down. Again, thinking about the competition at that time, and then the market did rally. So although I didn't maximize the capital out of that trade, I was happy with the analysis. I called it in the right direction, which is important as well. You want to be able to have the ability to be able to identify what markets are going to move and have the ability to understand why they're moving. And then the final one was Swiss yen. I went short Swiss yen. This was a very short-term trade. This is the one that allowed me to kind of really kind of jump up in the in the rankings of the competition. And essentially what I looked for here was the fact that the market was at range highs. So if I go up into the daily chart on here, you can see clearly the market is in a range. Now, I always talk about this on the channel. If you're very familiar with the channel, I talk about trading ranges can be really helpful to beginner traders. Reason being is they're very clear, defined support and resistance levels in the market. So what I ended up doing here, very, very simply, was price came up into the resistance level. Swiss yen was on my list potentially for a bit of a weakness, although I understood that the conditions then the market was in a range. So I knew that I didn't want to be in this market for a very, very long time. Now, looking at the daily chart, you can see the day before we had a big rejection candle of that key range high. Going into the hourly chart, all I looked for then, did price come back above that 50% level, which it did, okay? And I marked out a little bit of a zone in there from a lower time frame. There were some highs in here that I was interested in. Above the 50% level, I ended up taking a short position here at a very, very tight stop loss on this one. I think it was about 25 pips in the end, 35 pip target. So just over a 1-to-1 on that particular trade. So very good performance. I was really happy the fact that I came into the top 50 in the competition. But I'm just showing you, and what I want to showcase in this video, what I wanted to showcase in this video was the fact that I didn't really take a lot of positions in the market, and I followed a systematic approach to try and enable myself to have a good opportunity to pass the challenge. And essentially what I did was I used a currency strength meter in line with my heat map, in line with a strategy in order to take advantage of the market. Hopefully that was a big help to you. If it was, then please leave this video a thumbs up. Subscribe to the YouTube channel if you are new, and I'll catch you in the next video.